At the beginning of January, we announced that we sold our long positions in the QQQ, the Magnificent Seven, Bitcoin, everything. We then reiterated our bear market stance. After 2 years of being extremely bullish, in January 2025, we announced the bear market was here. We also announced when the market was at the highs, warning you of the downfall that was going to happen. For traders, we said it's time to short the market. For long-term investors, we advised getting into positions of cash. We also highlighted commodities, specifically natural gas. To say we were right, it is an understatement. To say people are still trying to sell you the illusion that we're going up, it is false. The fix is in. We are going to go lower. The opportunity to buy will be in 6 months to 1 year's time. I am not the only person coming up with this idea, but the people who are profiting off this is not the retail sector. It is the big hedge funds. It is the big investment banking. Short sellers have profited massively 10.8 billion on Tesla's decline, 4.92 billion on Apple, 4.27 billion on NVIDIA. That means since the stock market is pretty much a zero-sum game with a little leakage in the middle, that somebody took all the money from the retail sector, holding Tesla, holding Palantir, holding Apple, holding NVIDIA, and they profited. To say I'm the only one who thought of shorting the market would be inaccurate. But retail investors are still holding on to the dream. There will be a time to become bullish again. It's just not now. We knew the market was becoming oversold a week and a half ago. Even for long-term investors, this is another opportunity to take profits off the table. We believe the market will continue to move lower. For the past 3 months, short sellers have been making great profits. In bear markets, rallies can last 1 to 4 weeks. In reverse, when we were in the bull market, we were saying that a mini bear market can last 1 to 4 weeks. That's why we stand by our strategy. Short the market on rallies and take profits. Since the beginning of this YouTube channel, we have been right on, warning you 3 years ago about shorting the market, then 2 years going bullish, and now coming back to the same stance of shorting the market and buying commodities. That is our plan. When we announced to get out of the market, we said we'll see who's right in 3 months. Check, I was right. Now, in the next 6 months, let's see if the market is higher or lower from today. My prediction, lower. Now, you might have that 1 to 4 weeks that we rally. My idea is to short in. For long-term investors, it's to round up cash to buy in at the bottom. The next question is, people will blame Trump or Republicans or tariffs or this or that. What if I told you it wouldn't have made a difference? The story would have fixed itself that we are going lower in the market. This is not a political channel. My opinions on Trump are irrelevant. My opinions on the Democrats and Republicans, irrelevant. Many of the markets are moved by tariffs and inflation. And 3 years ago, it was maybe moved by the war in Ukraine and Russia, or commodity prices, or inflation. There's all different news stories that will drive this market down. For this channel, I am not for Trump or against Trump. I am not a Democrat or a Republican. I am here to profit inside the stock market, whoever is in president. And whoever was president this year, Democrat or Republican, this market will fall. It's just an easier story because a lot of people expected the market to rally because of Trump. But my system is based off probabilities. My system is based off what's the probabilities of going long, what's the probabilities of going short. We are going to have a dead cat bounce many times on our way to reaching the bottom of this stock market. What is a dead cat bounce? The market goes lower, 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 suddenly becomes extremely oversold, and then you get a few days up, or maybe a week, or maybe two. And then you go lower, 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 and another dead cat bounce. There are specific times when it's a real start of a bull market and just further opportunity to short into the market. So I want to start off with a very high probability trade. Before we get started, disclaimer: the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. Even if you do not trade the VIX, we specifically study the VIX as part of our system to inform us what's going on with the overall market. I think it's one of the most important indicators historically, analytically, and technically. As I am not selling you anything, what I'm challenging you to do is to build your own system. What I'm challenging you to do is not to follow me blindly or even to pay me money. You can be a fundamentalist, you can be a technical analysis, you can be historical. That's your system and how it works. Even though I do not agree with it, I can understand people who average down. That's their system. My problem with averaging down now, it's not going to work. This market is going lower. And by averaging down, you're just buying high and again buying lower in a month later. And finally, a year later, when you catch the bottom, will that stock be moving up to reach its all new time highs? I've been around a long time to know that things change. Intel, GE, AOL was the kings of the markets. Lehman Brothers was the kings of the markets. And one day the Magnificent Seven, too, will change the guard, and they will not see their highs again, and other companies will take over. But recently, there has been a good opportunity with the VIX. And this is important even for long-term holders of the VIX because there's potential for you to really understand when to loosen your positions and to buy more. For 2 years, I held on to the Magnificent Seven QQQs. That constitutes me a long-term buyer. And I took my profits. I didn't complain about the taxes, still long-term. I didn't complain who was in office or why was in office. And I didn't drink the Kool-Aid just because President Trump was in office. But what are we doing? When the VIX goes lower, that means there's no fear in the market and you need to short the market. And when it goes higher, we need to short the VIX and buy into the market. We will be waiting for the VIX to go to extreme levels for us to announce we're changing to bullish. But for right now, every time that this number goes lower, we are shorting into the market or buying into the VIX. So we've done this many times over the 4-year period of trading the VIX, but let's make an official recommendation. On 326 VIX, initial strong bullish recommendation crossing 17.75 or pull back to 17 to 18 with a trading sell stop of 14.25. We have done a stage analysis recently of the S&P 500 securities and the NASDAQ 100, and the majority are in a declining phase, even with 1 week of this market supposedly rallying. So our S&P recommendation short term is bearish. Our intermediate term is bearish. Now we're basing the VIX off what is going on in the market, and both indicators, short term and intermediate term, are telling us it is bearish. I have bought positions in the VIX and I have shorted into the market again. And based on my track record, do you think I will be right or wrong? Based on what we told you in January of 2025, based on what we told you in January of 2024, 2023, and 2022, we have a plan. The plan is to short into the market. Our short-term indicator, the day of filming, was telling us that we're in a good position to buy the market, buy the VIX, and short the market. If you go overbought, oversold, same thing. We're looking very much at components, which is not giving us screaming short signs. But again, we use what's called a weight of evidence. So not everything is going to line up to give you a 100% probability. If you look at the put call options, they're at extreme fear, which means bullish. If you look at the double AI market sentiment ratio, it is bullish. If you look at the RIDEX ratio, it is bearish. And the stock price strength is bullish. So what's going to fool many people is that there are signs that we are extremely oversold in this market, and many sentiment indicators are telling you the same thing. But if you combine many indicators together and give things a weight of evidence, which direction is this market really going? Just because the double AI market sentiment and the put call options and a few other indicators are screaming that we're supposed to go up higher, I am using a weight of evidence and probability of telling you we are going to go lower and we will have many dead cat bounces. In January, I said we're going to see who's right. We're going to wake up in 6 months before we get to a favorable period of time in the stock market. But even with a favorable period of time, the next 6 months, I believe, will be very difficult in the stock market. You know the catchphrase, study it, analyze it, adapt it. Peace.